Welcome back, guys. It's Matt from the Crypto Coffee channel. In this video, we're going to talk about which coin is going to outperform, PulseChain or PulseX. So stick around because the results might actually surprise you because it's not so simple as a binary black and white choice, okay? It's not necessarily that one coin will clearly win. I'm going to explain my mental framework around which coin I see performing better, but it also has to do with timelines as well. So for now, really the best kind of comparison that we have is basically the ETHUSD chart, if we're trying to compare it to something that already exists in the real world, because as we know, PulseChain is literally just a clone of Ethereum. So when Ethereum launched, it launched in the ICO style, right? And the ICO price for people that got in early on the Ethereum initial coin offering was 31 cents. Now for PulseChain, we have a sacrifice phase, which is a little bit different style of distributing a coin up front. And people get in all different ranges, right? People get in at all different prices. There's a bonding curve that gives you a progressively worse rate if you wait longer to get in to these sacrifice phases. But let's assume that, for the PulseChain sacrifice phase, that we're talking about the area before the bonding curve started. And we'll talk about, a relatively small fish that, let's say, didn't get any volume multiplier bonus. So we're disregarding that. And let's say we just use a floor price of 0.0001 for the price of PLS, because that would be what you would get with no volume multiplier and getting in before the bonding curve started. So look at the chart in front of you guys. So for Ethereum, what happened after it launched? Well, initially it launched at $3.12, like over a 10x from its ICO price. And so obviously some of these people that got an instant 10x on their investment, they were quick to sell off, and we saw a very fast sell-off in the first week right here and a bounce back. But overall, there was a big drop in the following 84 days after Ethereum launched. So it went all the way from $3.12 to around maybe 41 or 42 cents, okay? But you'll notice what's really interesting about this chart, guys, is that it never actually got below the 31 cent ICO price. And this might actually be the case for PulseChain too. We might not see prices below some of the lower sacrifice ranges, okay? So that 0.0001, judging by what happened with Ethereum, we might not actually see a dip below the sacrifice price, which would be awesome, right? Because then pretty much everybody wins, right? The people in the sacrifice phase, they all are winners, and then it gives people the opportunity to still buy the dip, somewhere in this initial couple of months, but the dip never actually gets lower than the sacrifice phase. That's what I would like to happen. That's a nice narrative. That's what happened with Ethereum. And so I'm just extrapolating and trying to make a guess about what may or may not happen. Now, when PulseChain launches and you're trying to secure your bag, assuming, let's say, you missed out on the PulseChain sacrifice phase, I know I talk about buying the dip a lot, but I wanted to point this out because I want you to be warned that the dip might not actually go to sub-sacrifice price levels, okay? So you're lucky if there is a dip, but it's not so much about what price should the dip go to before you know when to buy. You need to look at it more in percentage terms. So if there is a dip that's about 60 to 80%, that's when you'd want to start maybe dollar cost averaging in and layering in some buy orders. Because, for example, the initial dip in Ethereum went down 86%. So a safe dip buying strategy on this initial Ethereum launch might have been to layer in at negative 60%, negative 65%, negative 70%, negative 75%. And that will all spread your average price pretty low, right? Pretty low, especially when you consider what happened in the following year, right? So when Ethereum reached an all-time low, and we looked 350 days later, almost a year later, it was at a 2,800% rise. That's a 28x only a year later. And we can also look at what happened with Uni token as well, although there's not really a good analogy for Uni token because it was distributed to people for free. It was airdropped to anybody that had used the Uni protocol, right? So we had this huge run up in Uni because really there was no floor price for Uni token. So it's really not analogous to PulseX at all. So when we're talking about buying the dip on PulseX, we can still use these sacrifice price levels, but we can't really use the Uni chart as a comparison because the ways that the coin was distributed to people was very different. It was airdropped rather than pre-allocated via sacrifice points, okay? So with Uni, we had a giant run up, but we also had a dip, guys. And every time a new coin launches and there's some subset of people that got in the coin early, you can generally expect there to be a sell-off, which is why I've been saying like a broken record that buying the dip in either of these coins might be a good idea if you don't have your bag secured already. And now that the PulseX sacrifice is almost over, there's really no chance if you're watching this at a later point in time to really get into PulseX unless you wait until PulseChain launches, right? Then you can get into both of these tokens. But you'll see here that Uni, after its initial mad rush to buy it all up, it actually had a negative 77% dip. Not quite as bad as the negative 86 that we saw on Ethereum, but still a big dip, right? Which is really a big opportunity, okay? A big opportunity to buy. So again, you could DCA, dollar cost average, and spread some buys along this dip. So you don't have to time the exact bottom, but you could say, okay, I'm going to make a buy at negative 60%, negative 65%, negative 70%, and that'll put me at a safe kind of USD level so that by the time we're ready for takeoff again, I'll be positioned really nicely, right? You can see what happened in the next year. I've outlined in the next year of price activity for Uni, we went up 14x or 1,430%. So one thing interesting to note in terms of Uni versus ETH, right, is that Ethereum actually appreciated faster in the initial year after launching than Uni did. So will this also be true for Pulse and PulseX? Maybe. I don't have a crystal ball. All I can do is work with the data that I have. But this leads me to believe that Pulse token, PLS, might actually outperform PulseX token in the initial year. Now, it's all about time frames, right? In the grand scheme of things, which one of these tokens will actually win? Well, it's very possible that PulseX will actually end up accruing the most value in the long term. But in the short term, I believe it's kind of likely that PLS actually accrues value at a faster rate. Now, that's just a guess, and that might not be what happens at all, but either way, guys, for the dip buying strategy, what I'm trying to tell you is don't think about buying the dip in terms of a certain price level that you're looking for. Think about it in percentages. Think about when we're negative 50% or more, that's probably a good dip buying opportunity. It's much easier to think that way than trying to time the market and say, I want to buy at 0.0005 or whatever dollar amount. It doesn't really work that well. And the more I think about it, guys, really, I do believe there is a good chance that the price of PLS never actually touches those lower sacrifice price ranges. Because think of all the pent-up FOMO for PLS token. Because the sacrifice phase was so short, it was only, I think, 14 days, a very short time window, there's a lot of pent-up demand and a lot of FOMO of people that missed out on Pulse. So because of this reason, it makes me lean in the direction that the dip in Pulse, although it might be severe, although it might be up to 80, even 90% of a dip, it might not ever reach those sacrifice phase prices that the early guys got in before the bonding curve started, especially if you factor in volume multipliers and all that. But now, guys, which one of these is going to win in the long term, right? I gave you my short-term prediction, but what's going to win in the long term? Well, Richard Hart actually outlines a concept in some of his earlier videos that value accrues at the endpoints of a system. So what he calls the dumb pipes don't actually end up being as valuable as the applications built on top of them. One example of this would be that apps like Facebook or Snapchat or Netflix that are built on top of the internet are actually worth more as companies than the Comcast or the cable companies that connect all the internet to the power grid and all that. So the infrastructure layer, meaning the internet and companies like ComEd and Comcast, these are actually not worth as much as the end user applications that are getting all the traffic and getting all the activity, such as, Google and Facebook and Amazon. However, this is actually different than what we're seeing in crypto right now. Guys, look what we're seeing in crypto right now. This is nomics.com right in front of your face here. Look at the screen, and what do you notice about some of these coins in the top 10 or 15? Do you notice anything about what's kind of trending to the top of the list at this moment? Bitcoin, Ethereum, Binance Coin, XRP, Solana, Cardano, Terra, and even Avalanche, right? These are all coins that are layer ones. These are all their very own network layers. So I find that very interesting that the layer one solutions, the layer one tokens, like Ethereum itself, like Cardano, like XRP, tokens that have their own blockchain, that are the primary token for their blockchain, are all in the top 10 right now. So it turns out the market is actually favoring layer one tokens at this point in time, which is contrary to what I just said, right? If the layer one is just the dumb pipes that connect everything together, then really the endpoints, the value should flow to the endpoints. The value should flow to the applications built on top of PulseChain. What are those applications? Well, Hex is the store of value app, and PulseX is the trading app, right? You can think of it that way. So in theory, over time, value should accrue at endpoints like this, which would make Hex and PulseX very highly successful compared to PulseChain. However, it seems that the crypto market right now is really favoring the opposite. They're favoring layer one solutions. They're favoring kind of the railroad tracks that are just being laid down. And I think the reason for this is that we are still so early in this game. This just shows you how early we are in the whole crypto ecosystem at large. If we're valuing the dumb pipes more than the application layers, that means that we're more focused on building infrastructure than building actual use cases right now, which is very, very interesting. So I was actually talking to Dollar Cost Crypto about this. Shout out to Dollar Cost Crypto. Make sure you go like and subscribe to his channel. But he had this theory, and I kind of agree, that in time, value will accrue to the endpoints like Hex and like PulseX, and one day, Hex and PulseX may become far more valuable than the network layer token PLS itself. However, in the near term, meaning maybe in the next 1 to 2, even 3 years, it might be safe to assume that PLS will be the star of the show or the darling of the crypto ecosphere, right? So the question when it comes to what's going to win, PulseX or PulseChain, is really what's going to win, the application layer or the network layer underlying the application. And my prediction is that the network layer pumps first and the PulseX application layer pumps later on. And to even add some more logic to that, it's like we can't just expect massive trading volume to be done on PulseX from day one. The volume done on PulseX will gradually taper up and ramp up over time, meaning that the value of the token, because of the buy and burn function being based on the volume of the PulseX platform, might take some time to actually accrue value, leading me to believe that PulseX may become far more valuable in the future, in a couple of years' time, whereas in the more near term, PulseChain token might be the star of the show. But if you're thinking long term, guys, maybe you might want to consider selling something that's gone very, very high and buying something that's gone very, very low, if you expect the trends to reverse over time, like the hypothesis that I'm laying out for you right there. Again, this might not happen, but due to the fact that we know that value accrues at the endpoints in the real world, that crypto's in its infancy, and that we're really just laying down the railroad tracks for crypto right now, I think we could expect this to happen in a future world where the user experience is a lot better and much more people are onboarded. They're probably going to be primarily concerned with the apps built on top of PulseChain and on top of Ethereum. Now, to finish off, I'd like to read a little excerpt from the Sci-Vive book written by Richard Hart. If you haven't read it already, there are some really valuable nuggets in there. And I found this little clip that I think is really highly related to what I'm talking about right now. So it's in the money chapter, and it's called The Value of Catalysts. So I'll read it to you. It says, curation and catalyzing is super valuable. Shouldn't other curators and lubricants, catalysts, introducers, and networks be similarly rewarded for performing the same functionality as synapses in the global superconsciousness? How valuable is the firing pin and the primer to a bullet? What's worth more, the spark or the flame? It depends on how many flames you have, right? 0 flames, the spark is everything. Lots of flames, sparks are less valuable. So in this case, the analogy is flames are the applications built on top of the network, and the spark is the network that ignites all the flames, right? So the spark is needed for the apps to live on. The network is needed for the apps, just like the spark is needed to create a lot of flames. And with more flames, the spark becomes that much more critical. So I hope you learned something today, guys. It's not necessarily which one will win, but which one will win at which time frame. And how do people tend to value the network layer versus the application layer over time? So make sure to like and subscribe. As always, leave a comment and share the video. Pump your own bags, you know the deal. And I'll see you on the next video.